Distinguished speakers, Mr. Veisa, actually we have heard quite dynamic, energetic two presentations to kick off. I think this is a very good way of reflecting the dynamism of the Turkish business world, and the two speakers were quite relevant in just showing us the dynamism in Turkey. As we have seen in the video, we are just celebrating the 50th anniversary of Erbil, and I would like to congratulate them for this occasion. Actually, I am representing the World Steel Association as the Turkish Steel Association. Our association has been providing steel-related activities representing steel producers, this time from all over the world. The World Steel Association can also be considered as a medium where the world producers, researchers, and importers of steel are members too. To give examples of world producers from JFE and Nikos Plitoma in China, and Anchina Hebei, and Erdemir and Çolakoğlu in Turkey, Nucor, US Steel, and as of this year, Gerdau in America have been our members, and almost all the European producers are our members. As the World Steel Association, we do provide a common platform for the steel producers around the globe, and we intend to produce some common solutions to these common problems. As Veysel and Fatih have already referred to the significance of the steel industry, I do have an analogy which is quite important in the industrial production in Japan. You know, there is a huge success, and rice is quite relevant for the Japanese kitchen. And Japanese say steel is the rice of industry. As a matter of fact, for a national industry to grow, its success in steel utilization and processing are quite key determinant factors for the success of our country in general industry. You know, the world has been going through a rapid change, but also pushing some new challenges for humanity, such as population, urbanization, climate change. As a matter of fact, all of these problems can be solved by utilization of steel, but yet I have to say the steel industry has not been appreciated sufficiently, and leave aside appreciation, sometimes being criticized unfairly. Therefore, as the World Steel Association, we do consider steel as a remarkable product that can provide also a big role in solving the issues that we face as humanity today. World Auto Steel is another important event. Erdemir has quite pleasantly become a member to World Auto Steel. Actually, the use of steel in the automotive industry is quite based on an increasing competitiveness because of alternative metals. Therefore, I think it's a very important initiative that we've been running to provide a different positioning for steel in different industries. Therefore, I will be happy, more than happy, to answer relevant questions about that as well. Turning back to this presentation, global steel industry outlook, with a particular look into the life after the China peak, has been a quite popular matter of discussion, you know, recently. Mr. Fatih has already provided comprehensive information about that already, but as the World Steel Association, we do believe that the peak level that China can ever reach has already been achieved back in 2013. And in the coming years, including 2015, I think, the steel demand for China will be somewhere under that already achieved in 2013. Actually, it's quite possible, of course, to discuss down to which level this can go, or whether this will be stable, horizontal, or, I mean, will be just declining, inclining. We can discuss this, but the point is that the peak for China has been overcome, and the growth model for China is about the change. The very first implications can be seen in commodity markets, but from the perspective of the global economy, I think this is a turning point, which I think is the most important message to convey. Okay, this has been a turning point, but what's being left behind in the past, and what are the new challenges to come in the coming years? Yes, in this slide you will see the global steel industry and production. When you just concentrate after 1995, you will see a quite potent production that is being led by China. In other words, there has been a leap forward for development in China, which has ever been unique, and this is the leading position. I think that was contributed also by some other global developing economies in the global steel industry. The almost 800 million level of global production in 2015, 1.6 billion tons, was achieved in steel production. Together with steel production, there has been an enhancement in the capacity, again under the leadership of China. This steel capacity, which was previously around 1 billion tons, again similarly increased maybe more than double, and today it's 2.1, 2.2 billion tons of a steel capacity that we're facing currently. Again, in those years, we've had a super cycle of a long-lasting increment in the commodity markets, where the raw material prices that are used for the steel production, or maybe similarly, or more or less all the commodity prices stabilized to increase. So probably these kind of developments will not be seen in the coming future. We're about to start off a new period. And I think the most important thing is, although the biggest factor in the past was the change in or the development in China, the new factor in the coming years will be the changing growth model in China. Let's take a look at the history. Since early 1900s, the global steel industry have grown so strongly, previously twice in the past. The first one is in early 20th century, because of the rapid growth of the United States economy. There was another boost in that. Of course, looking back in China and comparing it versus United States, it just seems to be quite modest. But I have to say that back in that time, comparing it to the previous periods, United States became to be in the position of achieving almost half of the entire global steel industry. This followed by a restructuring and industrialization period in Europe, triggering a very fast development period in Europe, paving the way also for the accelerated growth of the steel industry in Europe. Now, taking a look at the pie charts in that period, share of United States regressed from somewhere, like 50% down to 20%, where Europe represents a remarkable pie with 30%. And following the developments in that period, the share of United States got down to 20%. So the number one message is, as the share of United States in 1960s regressed, we are expecting a similar, although not in that level, but we're expecting a progressively reduced share of China in the global steel industry. We have seen, of course, rapid growth times, but what happened in between those times? I think looking back in history will shed a light probably in our prospects prospects for the future. If I may, I also would like to turn back to this high growth after the World War I and this boost in China starting of 1995, we can say. So that, I mean, in the past we can speak about the oil crisis, the stagnation time just continued. Until 2000s, I have to say that the steel production had a very weak capacity. Nevertheless, in different parts of the world, maybe due to different reasons, the world entered into a restructuring process, if I'm not mistaken, back in 1970s and 80s. This happened in the United States, and in 90s in Europe. We have experienced a major restructuring in the steel industry, which had major implications over the global economy. I think this is quite remarkable for the period we're about to start in the near future. Turning into the next slide, the growth in the sector is weakening, which might not be a major problem, I have to say, because there might be other changes. Products may be diversified, pie can somehow be enlarged, but what makes the lives of steel producers difficult is about the capacity utilization ratios currently, because the previous period, like in 90s, had the capacity production levels that we are down to. The 2015 average, I have to say, for global capacity utilization has gone down to 70%, which I think will just bring up the discussion to another platform. In other words, the profit shares of the steel producers, whether they are sustainable or not. I mean, being profitable is really important today, but I mean a true profitability. But of course, another question mark is what this profitability level should be in the long run for sustainability. Now, this slide also provides the information that Fatih has already provided. But to wrap up, number one message is China is about to change her growth model. I've said that already, and this will have implications over all the commodity markets, including steel, and plus in all the domains of the global economy. This is going to be a very important turning point. So what was China's development policy? As you can see on the left side, when we just break down the Chinese economy into domains, the big green pie portion, maybe more than 40%, almost 50% is in the field of investments, which is quite nice because China had a current surplus for many years, kept investing this surplus to keep its position upper and upper in the ladder of development, and managed to provide a very fast development for its country. But when you look at the infrastructure, this infrastructure investment throughout the country has become so sufficient so far. So probably in the coming future there will be no additional benefit for China to invest further into the infrastructure. Just there are some investment needs for train infrastructures, but if you have ever been to China, you will notice that public buildings have been reinvested in, and there is a major housing stock already. The airports have already been renewed and refurbished. But in addition to that, China in many sectors has achieved a capacity surplus in many sectors. Therefore, it will not be attractive for China to make additional investment in some sectors. So China will have to change somehow her growth model. Therefore, this will have some implications over the local and global steel industry. So what is China going to do? China will turn more onto consumption rather than investment. Production will be turned away from heavy industry to other service branches, which will be more deliverable with higher profits. But having said that, of course, China still has an incredible level of current surplus. But we are speaking about a major economic conflict, which will have some negative accumulations, as we're speaking about the accumulation of the seismic zone, for instance, in the fault line in the country. The only way to just go beyond this, just to find a way of discharge. And this is the same for China, although China holds major resources. For China to achieve that change, creative individual power and strengths will have to be mobilized. And you would imagine that this is not merely economical or merely based on some leading industries, but rather this would take some political and social changes. If I'm not mistaken, or if I'm not just pronouncing wrong, Huko, they have a system, Huko, is such a system, and this system just causes many people just to look as if they are not registered properly. Actually, this may cause major gaps in the social security system. These will somehow be compensated for. So in other words, from the political perspective, there will be some interesting needs and processes to follow in China. Actually, Mr. Fatih has already referred to this growth ratio of China, which is down to 6%. Probably will go on with the plateau level, and this is the major expectation. But there are some real indicators, such as electricity consumption or low transportation by railways. China has shown negative figures recently. As a matter of fact, the social and political domains do have a role to play in the coming years. Having said that, of course, recently people tend to believe that things tend to be more stable rather than just going in the negative direction. But in a nutshell, China still has issues to resolve from also the social and political perspectives. Now, this is the China's steel demand since 2000, and the biggest share, of course, goes to construction, as you would know, and this is followed by industrial goods. And as I have mentioned, China has been investment focused for quite a long time, which means construction machinery, and for that reason the second biggest share belongs to industrial goods. Or investment goods, we might say, followed by automotive industry and some consumer goods. Okay, China has been shifting its direction in the growth model. Investments will be lower, consumption will be higher. What is the implication of that over automotive and consumer goods? Actually, the expectation is that these two shares will be growing. Construction and industrial goods, which are already bigger portions in this pie chart, will have probably less consumption of steel. Due to those reasons, in the coming years, in China, there will be a lower level than the one achieved already in 2013 for steel demand. This is our global steel demand outlook. Actually, when you take a look at this table, just breaking it down to the region that Turkey is positioned in, I also would like to explain to you what the implications might be. The latest position, maybe in the last 2 years, the global steel demand has weakened somehow. Since 2009, again for this year, we do have a negative growth expectation. This is a problematic year, not only for China, but for many other countries of the world. The economic growth expectations are mostly based on, although a recovery. period, but I personally do think that some things are being overlooked. The money abundance in the financial markets has just been seeking some position. There is some positive news breaking up, and the abundance is just flourishing again. But I think we're overlooking things. In the recent past, this global abundance, I think, could not find an implication over the countries becoming transparent and lawful countries concentrating on the rule of law, because we think that these are major indicators that would just reflect economic growth for developing countries. But in institutionalization, these countries do have some issues to resolve in the legal domain. Negative growth for this year, probably a 0.7% growth being expected for next year, which is mild recovery. As you know, European Union has shown recovery, although slight, has shown recovery, particularly for the automotive industry. Now, based on that, positive growth figures are being expected for the EU. But of course, comparing these levels with those before the downturn, it's still quite weak. Keeping up with the levels before the crisis, I think, still looks quite hard to achieve. Another sub-region, I think, can be read as Turkey, because this is almost 40 million tons of consumption. More than 30 million takes place in Turkey. Turkey's steel demand has shown a nice position this year, together with the wrap-up and recovery in the automotive and construction sectors. I think it's fair to expect a weak performance for next year in Turkey. In Russia, together with the decline in the commodity prices, there will be a lower economic regression, and the impacts of this will be expected for this year as well. NAFTA, when compared to other developed countries, there is a more positive towards look expected for Americans. But still there is a stagnation in 2015, and then in 2016 we expect a recovery which, although looks weak, is remarkable. Referring to again Asia, China, and Oceania, maybe Brazil also can be considered as a challenging country, because it has not just taken the structural reforms that were needed, and we do expect some changes in that direction as well in that country. Africa is another important region for steel, but political problems are picking up. Middle East is the same. Egypt is a very important market of the North African region, and as things seem to be recovering, the incidents in the last few weeks will have some implications probably over Egypt as well. Although the implications for economy are quite good, due to political reasons, we do not see a fast recovery in those markets. Turning again to Middle East, commodity prices are just coming up. I think we have to divide these countries into two. Countries such as United Arab Emirates, that have already fulfilled her duties in the past, that have become more durable and resistant against potential shocks. And again, major investments such as Expo has already been undertaken by the United Arab Emirates. I think because of this reason, probably they will just show a jump next year, but then there will be a decline again in the steel industry. In contrast to the Arabic Emirates, Saudi Arabia has started this leap forward for investment recently, but although the reserves are quite strong, we'll see what will happen because of this situation. I think probably there will be some problematic days to come for steel demand. India, more or less, when you just look the fast growth figures of the past. India is the only country that can show that fast growth. Asian, Southeastern Asian countries are quite important, and I have to say that the net importer areas are highlighted by the presence of the Southeastern Asian countries. Although their producers have had some challenging times recently, some announced to stop production for some time, but still this is how they look. Although we're expecting a global recovery, I do personally believe that there are some challenges that will follow in the coming years. Actually, this slide shows the steel intensity. This is a technical slide. Steel intensity is somehow the amount of steel the country will need in the economic momentum in time. What kind of a correlation is that? Of course, as the countries become richer, as they develop, they first will have to industrialize. In that process, a lot of steel is being consumed. In other words, per capita steel demand is rising quite rapidly. But as the countries complete their industrialization, and then when they finish up with their infrastructure, which United States is a good example because you can see a peak in the per capita steel demand, this is followed by a plateau level, which is quite stagnated as a pattern. Plateau level by these countries as a pattern. Now, I was saying that we can divide these group of countries into two: Japan, Germany, United States are the countries that are the countries that have seen the peak at a lower level. These are the countries that have diversified their economies, but they have created economies based on local consumption. Germany is an important exporter country, together with the development frog leap in Far East. They could increase their per capita steel demand extensively. And there is also the other group of countries, including Korea and Taiwan, which can be quite important in industrial goods and automotive exports. China and Turkey are also included in the slide. China, you can see, is following this countries, including Korea and Taiwan now, which has quite a steep line in increasing her steel consumption. I think together with this change in growth model, probably there will be a similar pattern as the United States, which I have to say that we have already seen a major peak in 2013. Yet we don't know what kind of a decline we should expect for China, but probably there will be somehow a decline and then a plateau level. Turkey is just fluctuating more or less in this trend, but Turkey has a $10,000 per capita income, which I think is quite remarkable for the steel consumption and demand. And you can see that although not as Korea and Taiwan, exports will become more significant for Turkey, which will be mostly based on industrial exports. I think Turkey still has major gaps to fulfill in the infrastructural capacity. Therefore, Turkey still has a potential to employ. Let's somehow turn to raw material markets. Actually, in this look, we have two quite simple indicators. Number one is the global steel demand, which is not expected to present as strong growth patterns as in the past, and you can see that on the diagram to the left, and on the right you can see the share of EAFs in global steel production to increase modestly. So the integrated production level also is important in this respect. Turning to the last 2 years, scrap-based producers have had major issues, and especially in China, scrap-based production had a major decline. Therefore, the share of EAFs in the total production had to be lower than the traditional 30% level. Actually, based on here, as part of the ordinary conditions, we do expect, although mild, a recovery. There will be a mild recovery in the AFs, and the global pie will not grow extensively, which means that the growth of the global production will not be based on, incredible levels. From the perspective of raw material, the demand for scrap and DRI probably may increase, and actually the demand for pure pig iron may also be modest. And this slide also reflects what I've been speaking of. In the period to follow and in the midterm, there will be an expected increase in scrap and in DRI, together with the investments in the United States, and all since Middle Eastern countries still have a demand for DRI, and also in India we do have major investments for DRI. We do expect an increase in demand for DRI and scrap, and for BF iron there will be a generally a stable demand expected. Of course, turning to the iron ore markets, there is an interesting picture. Actually, this table shows iron ore supply. As I worked a few months ago, there is an incredible increase. In parallel to the demand in steel, as the demand has increased with the infrastructural works in China, again concentrating particularly on China, there will be a capacity, there has been a capacity increase in countries exporting iron to particularly China. In the coming period, we do expect somehow concentration on Australia, plus Brazil will be leading the process in providing additional supply to the market. Actually, the supply has reached tremendous scales. The major four iron ore producers do have 1.3 billion tons of a total capacity, and for overseas trading, the biggest fourth producer may have the potential of just having a marginal producer. Actually, this together with the horizontal BF iron demand expectation, we can have some idea about the potential growth and the developments in the coming period. This slide also presents an interesting development. This is the global scrap availability, which is really presenting a strong growth expectation globally, because since 1980s, not only developing but developed countries also do have a major consumption under the leadership of China. In 90s, together with consumerism, there is an increase in consumer goods, which mean that in the years to follow, as these products purchased in 1980s, 90s, 2000s may again come back to the market as scrap, which might have a triggering effect in the growth figures every year. And of course, scrap availability is increasing. Iron ore availability looks to be more than the demand, which in turn presents a picture of iron's availability surplus for the global markets. When there is this kind of a surplus, this gap between demand and supply may just be increasing further every year. This is a multi-dimensional problem which needs to be discussed in different aspects. But one thing maybe we have to highlight here in this short time is these three portions, I mean dark blue, light blue and green, all indicate the scrap availability as expected to progress in the coming years, and the orange line indicates the consumption. Looking since 90s, consumption was more or less in the level of availability. Because of some problems in the AFs, actually there was expected an increase in availability of the scrap, but because of these problems there was a decline. If the availability increase maybe additionally 500 million tons, what will be its impact on the global steel markets, I think would be a major question to ask. I think this really is a major question that will have implications over the operational and investment plans for the near future. In the last few slides, or completely in this presentation up until this point, I was quite cautious. This is because of my personal opinion, but nevertheless steel has major advantages which I think we'll have to keep in mind and we'll have to remind to the rest of the world all the time. I think the most important advantage is that steel is the most advantageous product in many dimensions. In many dimensions because of the material utilization. I think steel will continue to be the material of preference, and it's true that competition is increasing on new materials and new materials are being introduced, but as we take a look at the diversified perspective, based on the volume of production, based on the logistics chains and the capacity of all of these chains in undertaking this demand, steel will continue to be the #1 product. With a single statement, I have to say, as I have just mentioned at the outset of the presentation, new times, new problems. But I think remarkable solutions can be provided to the new problems. But this role of steel is somehow being underestimated by politicians or decision makers or lobbyists. I think that as the steel family and the steel organizations, we have to be quite insistent in emphasizing the significance of steel. The last slide, just to emphasize the performance of materials as an impact on the environment can be assessed in different ways. Recently, we are all aware of a car manufacturer going through some problems because of the exhaust secretions. There was somehow a discrepancy, but as the automotive producers or manufacturers are trying to make the cars lighter, they will have better exhaust secretions, and this would mean some toys to be incorporated into the cars. But at least, I mean, the frame maybe of the car may be becoming lighter, but they're just uploading the cars with different equipment. There are materials that might be lighter than steel, but only based on the exhaust performance. I think steel probably will have a more successful environmental performance, but on the entire life cycle, steel, when compared to alternative materials, will have a quite remarkable position to provide. I mean, 1 to 7. This is really a big impact. 1 to 7 less environmental impact, which I think will have to be re-emphasized once again as the steel family, because by using modern measurement methods, we just will have to compare it against the other materials. Just to wrap up, I think this slide makes itself quite clear that we are about to expect weak growth when compared to past. China peak demand is most probably behind us, but in general terms, the the developing world or the developing countries still have a huge potential for steel because they still have running infrastructure investments, and of course in these countries consumption dimension is also growing. Therefore, we have all reasons to be hopeful for these countries, but we should keep in mind the political dimension and its implications over this. As we turn to the raw material markets, of course we have a slight demand imbalance, not only in the midterm, maybe in the longer term. Trying to have forecasts may be quite difficult, but we have to also emphasize the fact that we want to keep the input costs lower, but what is the implication of that onto the profitability? Unfortunately, based on our observations, we do not have a sustainable, of course, level of that impact on profitability rates. I think, last but not least, we have to be quite insistent on another factor. Steel is a multi-dimensional material. Steel is the most advantageous product in that respect. Of course, the new problems can be resolved by the use of steel. Of course, when you look from modern measurement methods in terms of its impact, steel, as in many cases, steel is the most advantageous, most environmental friendly material that can be used. Thank you. Thank you, Barış, for this comprehensive talk. Because of time constraints, we will not be able to take a lot of questions, but maybe we can have one burning question, if any. Hello, I'm from Samsung, Cem Enginarlar. One point that attracted my attention is, in the past, as in the United States, China will have a diminishing share in steel production, maybe under 50%. Although hard to forecast, what level do you expect, I mean, for China as a percentage-based estimation? Do you have any estimate for that? And do you think other countries can compensate for that? Which countries? As I said in this presentation, we can discuss in different perspectives, and I don't think that it's wise to give figures representing the World Steel Association because there are some other institutions that might be in a better position to give these forecasts, but we're in the verge of a decline trend. But which countries may compensate for that? It's an interesting question. Looking at the international trade balances, you will have some idea. Although these are just have sat in the regional level, probably we can expect an increase in the deficit zones. But it's not just in China, but as I said, in China, in the automotive sector, for instance, consumer industry, there might be an increase. But China, for instance, is, if it gets a more relevant share in automotive production, maybe Korea and Japan will also go through some decline in the production as well, which is really a deep topic. Thank you.